Hi, it's September 16th, and this is Markets Daily, hosted by me, Ben Schiller. I'm filling in for Jen Sanasi today. On this show, we navigate the currents shaping the crypto markets, providing insights against the broader financial landscape. Whether you're actively trading or simply fascinated by the volatility of crypto markets, this show is your compass to understanding what happened and where we are and where we're going. So good morning, everybody. Joining us today is founder of Lyn Alden Investment Strategy. Welcome, Lyn Alden.
Thanks for having me. Happy to be here.
So, Lyn, you're a veteran market watcher, very respected in this space. Just give us your sense of the market at the moment. It seems like everyone's talking about the Fed cut. How is that affecting market sentiment, do you think?
So overall, I think markets are kind of in this pause where, they're not really falling, but they're also, it's unclear if they're going to be able to break out to major highs, talking about the major equity indices. Outside of the gold market, a lot of other markets are kind of ranging. And one of my kind of major points that I've been making is I think the market is emphasizing the Fed too much. There's so much attention right now on two main things. Is the Fed going to cut 25 or 50? And what's the path going to be for future rate cuts? And then the other one is whether or not the US is going to have a recession. And those are obviously very important variables. But I consider them somewhere like second place in terms of major things that are happening. And I've been kind of pointing out that if anything, China's ongoing economic malaise is probably the biggest factor in markets to watch. So, when I kind of look at the major headlines every week, I'm more looking along the lines of, has there been any change out of China, or is that still the kind of the same situation? That for me is like more important than saying, okay, what's going on in the U.S., what's happening going forward with the Fed, those types of details.
Right. So just unpack that a little bit. I mean, what is it about the Chinese economy that worries you, and how does that affect us in the crypto markets?
Right. So China is basically the biggest country in terms of trade partners. So they're the biggest trade partner with most countries in the world. 20 years ago, that was the United States. And if you kind of look at the map of country trade over the past 20 years, it's gravitated heavily toward China. They're a very physical economy, whereas the United States is a more financialized economy. And so when you look at things like steel production, infrastructure build out, manufacturing capacity, and kind of most other variables, they're a larger economy. And so whether or not they're running hot or running cold impacts countries worldwide and impacts global liquidity and impacts kind of global the pace of economic development and growth. And they've been in a economic malaise for the past couple years because they're going through a property bubble deleveraging similar to what the U.S. went through after the global financial crisis. And they have been reticent to do any sort of major fiscal stimulus. So whereas the United States, when we went into COVID and the aftermath, we were doing very large scale fiscal stimulus direct to consumer. China's is much more reticent to do that, in part because one of their main goals is to internationalize their bond market and their currency market. They want more trading partners to accept their currency for payment and then to hold their currency as bonds for some intermediate period of time because they know that they can use it to buy all sorts of Chinese goods and they need it to hold their purchasing power to some reasonable extent in the middle, kind of like how countries use treasuries as reserves.
Right.
And so they have these kind of conflicting goals where they want to hit their growth targets, their economic growth targets, and they want to have social stability. On the other hand, they want to internationalize their currency, so they want to play it rather austere in that sense. And right now there's increasing tension on Chinese social media about the state of the economy. There's basically just low domestic sentiment, even though their exports are very strong. And as the one of the two biggest money supplies in the world, and as one of the two biggest economies in the world, I would say that to the extent that whether China does fiscal or stays in their malaise for another year impacts most asset classes, ranging from commodities, global bonds, global equities, and then yes, stretching into Bitcoin and other assets. I think that's overall a bigger variable than the U.S. at least in this current time. It's not that there's always a bigger variable, but that basically whether the U.S. cuts by 25, 50, or 100 basis points over a given multi-month period, that monetary policy lever is less impactful than structural fiscal pivots and things like that out of a major economy.
Right. I mean, just quickly, I mean, do you think it will be 25 or 50?
I don't have a strong opinion this week. I think we'll see in the coming days. They'll probably signal which way they want to go because they don't want to surprise markets.
Right.
But I don't have a strong view on whether it's going to be 25 or 50. That's basically deciding what a handful of humans are going to go based on
Right.
roughly 50-50 data as of this recording.
That's a great point. Okay, so just this question of liquidity. I think you have some research coming out. Is it this week? Looking at the relationship between global liquidity and Bitcoin prices. I mean, how does that work exactly?
So a lot of people focus on Bitcoin and the halving cycle, but one of the things I've been emphasizing for years now is that the strongest correlation I see with Bitcoin price is global liquidity. And global liquidity is kind of a topic. You could define that in multiple ways. The way that in this kind of research that we define it is global broad money supply denominated in dollar equivalents. And so that takes into account both kind of global credit creation and it takes into account the dollar strength relative to other currencies. And the reason that's relevant is because a lot of global trade is priced in dollars. The majority of inter-country debt is denominated in dollars, and so that it's a unit of account that's very important, especially for liabilities. And so the strength of the dollar and the overall amount of dollar equivalent global M2 is really important for a variety of asset classes. And we ran correlation analysis and found that among all major asset classes, Bitcoin is more directionally correlated with global liquidity than any other asset. Now, when you just look at raw correlation, the numbers are messier just because Bitcoin's so volatile. But when you ask the simple question, if liquidity goes up or down in the next 12 months, the way we define that, which asset classes are most likely to go in the same direction? And there are some that have pretty low correlation, like bonds. If anything, there's a slight negative correlation because bad liquidity is generally, worse economic conditions. People pile into risk-off assets.
Right.
There are other assets like the S&P 500 that are quite correlated with global liquidity. Over 70% of the time, they'll generally go in the direction of global liquidity. Whereas in our study, Bitcoin was the highest. At 83% of the time, it'll
Wow.
go in the direction of global liquidity. And that's, in my view, because one, it's still perceived as a risk-on asset by most pools of capital. And two, it doesn't really have confounding factors like earnings or ties to the economy. If anything, it's the most pure liquidity play we see out there.
So it could almost be a proxy for liquidity as a kind of measure of it. Interesting. So just more generally, just to give our listeners and viewers here a sense of where you think things are going. I mean, are the markets going to go up this week? Are they going to go down for crypto? What do you think?
So on a week by week basis, I don't really have a firm view. That's more of a day trader type perspective. I do think that global liquidity has been basing for like 2 years now as central banks have been trying to tighten. But as we see the Fed start to ease, as we see other central banks start to ease, I do think over the next 12 months, liquidity is going to do pretty well. We already see it gradually breaking out of the base that it formed. Um, and with Bitcoin, I think an issue is that it kind of pulled some of that forward with the ETF launch. The ETF launch was a very popular bullish event. And I think that some of what might happen throughout this year was kind of pulled forward all the way into February and March. And
Right.
so we have gone through this kind of multi-month period of doing worse than liquidity alone would say. But I think that once we kind of work out the success, and I think we're kind of pretty far in that process. I think we worked off a lot of the excess and a lot of the pre-enthusiasm. I am bullish over the course of next year on Bitcoin personally.
So it's almost like with the ETFs, we had our cake before we had our eating time, I guess, something.
Yeah. I think you have to digest that a little bit, but I think a lot of that's done. I think when you saw meme coins going vertical again, that's always a little bit of a sign that the market's a little bit over enthused. I think a lot of that's worked itself out, and I think that now it's probably has a stronger base to build from next year.
Well, thank you very much, Lyn Alden. Always good to talk to you, and we'll see you next time. That was Lyn Alden from Lyn Alden Strategy.
Thank you.